So that being said, we're going to go ahead and get into the top 5 stocks that we are watching this week. Now, if you've never been a part of Stock Watch Sunday, if you've never been a part of Own the Chaos, every Sunday at 7:30 p.m. Eastern Time, we go live for Stock Watch Sunday, and we pick out the 5 stocks that we think are worth watching for the week. And my first stock for this week is going to be, Square. Square has earnings on Thursday after hours, and PayPal has earnings on Monday as well. We think both of these stocks are going to do extremely well. Not just really, if we're not looking at this particular week because of the climate the stock market's in, we're looking at it, maybe even going into the end of the year, maybe even going into the beginning of 2021. These two particular stocks, PayPal and Square, and particularly Square is one that I'm kind of watching, keeping my eye on, is there's going to do continually well, especially if more cases of the Rona arise, especially if we see more remote work taking place, especially if we see the trend of frictionless transactions continue, which we do believe probably will persist whether the Rona has a vaccine or not. I think this is just a way of the world and way things are going at this point in time. Estimated earnings per share are at 16 cents. I think they come in and smash those records. If we go in and look at Square on the chart, I'll have this pulled up for you here in just a second. Last time they had earnings, they came in with earnings at 18 cents. Their expected earnings per share was at a loss of 4. Came in and crushed that 229%. I think that analysts are starting to catch up to this, but I don't think they're fully caught up. And I think that 37 cents a share is actually pretty conservative, if I do say so myself. Third quarter for them, I think, was probably a monster quarter, especially because they were still reeling off of stimulus, the first round of stimulus and that sort of thing. So I think that Square does really well this quarter. And even if they start to sell off, I would see this as an opportunity to probably scoop up some cheap shares of Square.
You have them at 37 cents a share?
Yeah. Bold predictions. I'm full of bold predictions this week, so just prepare yourself.
We gotta set parameters on what a bold prediction is. How we define a bold prediction.
But I mean, if we're talking 300% above, or no, I'm sorry, over 100% above what expected earnings are. So I'd say that's still pretty bold.
Okay, that's fair. I mean, I think that would be a record for them.
It would be.
That'd be the highest for them.
Yep.
So I do agree they beat. I don't agree on your number, but that's fair. 25 cents a share. So yes, I like PayPal, but again, PayPal, Square, have your choice at it. Now, if you are going to get to it, the interesting thing is PayPal has earnings tomorrow. So we saw this with social media. We saw this when Snapchat reported earnings, Pinterest reported earnings, and then everything else was after. Snapchat reported, blew it out of the water. Everything else ran.
Yeah.
So if you do want to play it, I would say get in tomorrow before PayPal's earnings, because they should both be similar as far as how they perform. And I expect PayPal to also beat. So I think a great play is Square because it allows you to hedge your bets a little bit, see how PayPal does, benefit off of that run up. But again, if PayPal blows it out of the water, Square may have a move into it, and you need to evaluate, do you take some profits, take some off the table, or do you let it run expecting Square to blow up? So, dude, this is a great company. Both of these are doing really well. They both have exposure to crypto now with Bitcoin. They're sort of expanding their reach, which is what I really like to see. Obviously, with Venmo and with Cash App, they have a community that they're building, which companies like Visa and MasterCard and American Express can't say the same thing. So, great company. It's going to be a great earnings, and excited for guidance. Now, I should say this now, just get it out of the way because it stands for all companies. Guidance, we talk about giving guidance. We saw last week many companies withheld their guidance. I fully expect most companies to withhold their guidance because of the shutdowns that are happening abroad and the uncertainty about what's going to happen here domestically. So don't expect a massive run up if guidance is withheld. That's a huge indicator. Beating isn't enough.
Right.
So for those of you who don't follow us, just because a company beats earnings, over 85% of companies beat earnings. That doesn't mean they go up. So there's other factors that go into it. One of the big factors is guidance. So that's it for Square. Number 2, we have Peloton, ticker symbol PTON. We
Is that some of your Spanglish coming in?
Love Peloton. We love it. So Peloton's coming in, reports same day. We have a bunch November 5th, after hours, 11 cents a share. This was really tricky, Brad, because I was a little bit gun shy. Here's what I want to say. First of all, I think they beat. I have them beating slightly by to 13 cents. So they're going to report 13 cents. And I wanted to give them more. I wanted to give them a higher number. But here's a few things that I want to consider as we look to Peloton. So last earnings, they did beat. They actually had a great earnings, which we expected.
Yeah.
They reported 27 cents a share. And I wanted to come in around there. And I have a hunch that you might come in around there, but we'll see. But here's what to consider about Peloton. Delays are picking back up again. So we'll hear about that. But I worry about their ability to unlock the revenue. Forward guidance, again, that's going to be key. The Bike Plus launched on September 9th. So the last month of the quarter. Here's what I want you guys to know, or I want you guys to consider. So if you don't know about Peloton, they're known for their bikes. They also have a high-end treadmill. And so last earnings, they announced, and we knew it was coming, They announced that they were going to take their current bike and they were going to lower the price and then add a higher end bike called Bike Plus. And it's badass. It's badass. Bike Plus. And then they were going to take the treadmill and they were actually going to offer a more affordable option, which is awesome for that. And so that's the Peloton Tread. So the thing about that is, they lowered the price of the regular Peloton bike. So what I need to see is, what's the split? Are people buying, in fact, more of the Bike Plus, or are they not? And if they're not, that hurts them. That hurts their margin. That hurts their revenue. So for that, I'm a little bit hesitant. But what I would love to see, so I believe the Tread is going to be launched in early 2021. If we get a date on the Tread, that's going to be really good. I think that's going to bode well for them. And the rowing machine is next year, which I don't expect them to give a date for that. But if they give a date for that, that will also be huge for the company as well. So guidance, a specific date for the Tread and a specific date for the rowing. If those 3 things happen, I think this stock goes off. So look out for that.
Yeah, I actually can't wait for the rowing machine. I actually would probably highly consider buying the rowing machine when that comes out. Yeah. You said that you thought that my earnings expectations were going to come in close to yours, and you couldn't be more wrong.
No. Close to last earnings, 27 cents.
Oh, I thought you said that you were saying that it would be close to the 13 cents. Yeah, I'm saying that they're going to come out with another good quarter at 35 cents per share.
Damn.
Expected earnings per share at 11 cents. Here's why. They talked last quarter about how they were actually going to keep up with demand. They proved that in the last quarter compared to the previous quarter that they actually were able to keep up with demand, and they're shorting that delivery time. It was at one point 8 to 12 weeks before you actually got a Peloton bike, and it's decreased dramatically. They've been able to keep up with that and actually perform and operate more efficiently. The other thing is that they are one of the very few companies, the handful of companies, that not only kept their outlook instead of withdrawing it, unlike most companies did, but they actually increased their outlook for the 2020 year. And so I'm expecting them to do that yet again, because we also have the holiday season coming up. We have the resolutioners that'll come up after that. And who knows what other, catalysts they may provide, to your points, as far as the Bike Plus and the Tread, the rowing machine, all of that stuff they have. And so for me personally, I like stocks. I like companies that have a story. And with Peloton, the story, I think, is still just starting to get written. And obviously, the Rona has helped them kind of propel even faster than we probably expected them to actually grow. But this has been great for them. And I think that this is just only going to continue to grow from here. I don't see this leveling off in this quarter, next quarter, and maybe even the quarter after that. I like Peloton a ton. Now, should we buy this right now? I think, our sentiments on the market were very clear in the beginning of the show here, but I think that they do actually beat, and it actually broke this support on Friday at 120 and started to come down. It was actually closed at 110. I think that if you're looking for another area to potentially buy Peloton, maybe even the beginning of the week, I like $100. And if you can get it, if by some chance Peloton gets under $100 a share, I think it's a very clear buy, because one thing that we still aren't talking about is the recurring revenue that they do have coming in as far as all of their classes and that sort of thing. They had record class in April, I believe it was. Fat Man Zoom, you can correct me if I'm wrong. Is it either April or May? I think it was late April. So I think that they are just poised to continue to grow from here. I know that 35 is probably a bit ambitious, but I think that they could come in close to that.
Yeah, we'll see. And if it does go below 100, I agree with you. And this is going to be the hardest thing with what I talked about, my strategy early on. Let me be clear. In my long-term account, I'm not touching anything.
Yeah.
I'm not selling anything.
Yeah.
It's going to be hard for me to not get into stocks like this. But when that stimulus goes through, stocks like Peloton, stocks like Zoom, because of the lockdown, they're going to go off. Which, side note, if you guys haven't seen the video, we did the 5 stocks. If Trump wins, we release that on Friday. Tomorrow afternoon, we're going to release the 5 stocks if Biden wins.
Yes.
Zoom and Peloton are not in there, but they could have easily been in there. I think they're obvious choices, and we talked about it. But anyways, yeah, we'll see, man. It'll be super interesting.
These are definitely stocks that I would consider getting into, no matter who's president, as far as that's concerned. And there's definitely stocks that I think they're immune to not really mattering who gets in, as far as that's concerned. But those two definitely could be a factor. One other one that might be a non-factor as far as who becomes president is Callaway. Which is actually one that I don't know how you want to put it. We kind of stumbled upon last week. We started talking about them potentially having earnings last week, and then we found out that they actually don't have earnings, that the earnings are this week. They come in on Tuesday, and I think that Callaway has potential to continue to grow here as well. Fat Man Zoom, I know that you have picked up golf. I know that I picked up golf and played more golf than I ever have in years past. And a lot of that has to do with the fact that it's the perfect social distancing activity. They just acquired Topgolf, and analysts said that that was a dumb idea because of the pandemic and how this might actually end up costing them more money in the long run. But I think that this was a perfect opportunity and the perfect time for Callaway to actually buy Topgolf, because if Topgolf was actually continuing to grow here, let's just say the pandemic didn't exist. I don't know if Callaway would have been able to afford to purchase the rest of Topgolf because of what it might have been worth if there was no pandemic. Now I think is a perfect time to buy it. And we still think, that this is obviously a great time to own something like Callaway, because we're not even just going to talk about Topgolf, but even just golfing in general. Bags. I'm sure you have plenty of friends that have taken up golf that didn't used to play golf this year. So, and many of you guys out there probably know people, or maybe even yourself took up golf more this year. And I think that Callaway still stands to do really well. Last time they crushed earnings and beat it by a 76% compared to estimates. The quarter before they just missed, but that was still at the height of the crash. And so I think this time around, their estimated earnings per share are at, I just lost my spot, are at 33 cents. Yep. 33 cents a share. I think they come in at 42 cents a share, and I think they knock it out of the park. I think also, we look at the chart here on Callaway, I'll bring us back here, that Callaway seems to be poised for a nice buy, even if this week, this is probably one of the few things that I would call a buy, even this week, because of how far it's come down, because of the reaction to the Topgolf merger, of them purchasing the rest of their share of the company.
Yeah, I have them coming in at 34 cents a share. I do think they beat. My issue with Topgolf, or what I'm going to look at for Topgolf, is think about this. Their next earnings is historically their lowest earnings, because that's their slow season. That's when the weather gets shitty.
Right.
So if you look at a year ago, same earnings, they estimated 25 cents a share. They actually came in at 36 cents a share. So it should be around the same thing. The next quarter, they had a loss of 23 cents a share. The year before that, that same quarter, they had a loss of 32 cents a share. So it might be a rocket situation going to the slow season, but now I don't think that the next quarter is going to be as bad as estimated if they give guidance, but that just bodes well for when, right before that quarter, which is, February, maybe getting back into it in February. So I'm not holding on to this. I'm playing this up until earnings. I might hang on to it if I don't get stopped out. But if there's a run up, I'll take my profits right before it. So we'll see how it works out. But I'm glad everybody got into it. I mean, I imagine everybody in this room are in.
If you guys weren't here for that, we went live. We're talking about Callaway. We thought that, what was it, Wednesday, I think it was, that we thought that Callaway had earnings, and turns out they didn't have them until this week. But nevertheless, we were able to get it on the cheap. Most of us got into this under 1550, and I think this is actually a really good opportunity to probably play the pop anyway. But to your point, I think that you bring up really good ones. And it's interesting that last time, would you say this time last year, what were the earnings this time last year?
So the estimates were 25 cents, and they came in at 36 cents. 36.
So I think that kind of, for me, makes me feel even more confident. I didn't know what they came in last year. I mean, last year they didn't have.
Bro, you ain't doing your due diligence.
I know I didn't do that, but I think that you look at demand compared to last year, and I'm sure it's probably far greater. So I would imagine that we probably could see something close to over 35, or maybe even coming close to. Maybe somewhere in between your estimation and mine, between 34 and 42 cents. Either way, we think Callaway beats, and, obviously consider the market being what it is, but this could definitely have potential to make a little pop, and maybe you can make a short-term trade on this one. But yeah, some really good sentiments as far as
next up, we got Roku again, Thursday after hours.
Thursday's going to be another big day.
Yeah. Loss of 40 cents a share. I have them beating, and I think I'd be like, it's probably easy to say they're going to beat.
Yeah.
Here's what's interesting, Brad, without getting into it too much. So I was honestly surprised at their estimate. I thought it'd be a smaller loss. So last earnings, they beat. They estimated a loss of 50 cents. They came in at a loss of 35 cents. Again, I think they're just being conservative. There's some uncertainty, but I think that you can say, at the very least, I would imagine it's better than last quarter. So a loss of 35 cents. I'm going to say a loss of 30 cents.
Okay.
And I'm going to tell you what I expect is going to be a catalyst for this, or news for this that's going to help them, that we've already been told, but people may have not tied them together. The return to digital advertising revenue that we saw in social media, I think the same story rings true for Roku. And Roku is holding their own as far as market share is concerned with the streaming services. And they have an added advantage, which is the digital advertising. So they generate revenue through that as well. And so let's see what that comes in. But I think that they say we have stronger than expected ad revenue coming in, and it's pouring back in. So I feel really good about this earning. Loss of 30 cents. What say you, my friend?
I think that Roku, Mike, I have concerns about Roku. I agree with you. I think there's definitely some potential for them to beat. My only concern is, and back to your point on Snapchat and how this could affect Square, having that same effect, like if PayPal beats earnings, that it might actually impact Square before Square's earnings actually come around. I think that we could actually see something along the lines of that with Roku if we look at Netflix and how badly they beat earnings when it comes to other streaming platforms. Now, Roku is a completely different animal, and it may be a little bit more of an apples to oranges comparison, but nevertheless, they're in the streaming sector, and I think that this could potentially be one that actually misses, but I still have them beating slightly at loss of 39 cents compared to 40 cent estimates. So I have them just barely beating, but I'm a little concerned about them just because of just a drastic drop off we saw in active users on Netflix. And I'm wondering if we see a drop off in active users on Roku as well. And if that's even a metric that investors are going to worry about moving forward into the next quarter, even after looking at these earnings. It's already made monster moves. It's up 100% just from June. And I think that could potentially be, this could potentially see a huge drop off on here. We go and look at the chart. If you're looking for potential entries on this, I would say look at maybe 187.36, somewhere around there. But that's probably one of my bigger concerns for Roku.
So you think that Roku's going to have a worse earnings than last quarter?
I think it's possible. Yeah.
Okay. Apparently you got a hookup at Canopy Growth because I'm smoking the crack.
Hey, listen, that's why you guys watch this here, because we give different perspectives. But I appreciate us having differences of opinion on this thing. That's the cool thing about, like, when we go live, guys. We don't actually really know what the other one's going to say. Sometimes we have a pretty good idea, but it's kind of cool that we actually have this dynamic.
We don't know our earnings numbers. We definitely don't know that.
Yeah, for sure. All right, so the last one that I have on the list here is going to be Wayfair. This is going to be a really important stock. I'm just going to bring us back here. And the thing with Wayfair is this. We know that residential real estate is booming. So whether you're looking to sell your house and you need some things from Wayfair to perhaps stage it or whatever, or you're moving into a new house and you need some products from Wayfair to perhaps, spice up your house, or maybe you're not planning on moving at all. Either way, people have been home. They've been using stimulus money and all that good stuff. Now, we know that potentially most people have run out of that by now, but nevertheless, they're using that money to decorate their house, to improve their house for whatever reason, whatever is motivating them. And we already know that real estate's a big thing. And I think that's one big thing that could be why Wayfair does really well. Now, they have earnings on Wednesday. And I think that sales in the first, we looked at sales in the first half of 2020 landed at $6.6 billion, which is up $2.3 billion or 54% from the prior year. And obviously the boost was from the Rona and stimulus and all that good stuff. I think we need to see a repeat in order volume and average spending per order on Wayfair. I think we see it. And I don't even think that they blink an eye as far as their outlook is concerned. I think they actually maybe even uplift their outlook for the rest of the year. Like Wayfair a lot. And if this is a little bit of a precursor to what we're talking about in tomorrow's video, as far as stocks to watch for Biden, if Biden wins, this could be one on that list too. It was not, but this would definitely be one to watch for if we see a Biden win, because of all the subsidies that he might be potentially be carrying out for housing, low income housing, all that good stuff. Wayfair, definitely one that I would consider owning for sure.
What did you give us the estimate? Sorry, I missed that.
I'm sorry. Estimated earnings per share are at 80 cents. I'm not, I promise I'm not on drugs. Okay. I promise I'm not
$2.
on drugs.
You're going for $2.
Last earnings, they came in with actual earnings per share of $3.13. $3.85.
You're going $3, aren't you?
$3.85.
$3.85? You are smoking the crack.
$3.85 for Wayfair. Earnings are on Wednesday. We'll see what happens.
Yo, pick up Wayfair, because if it's $3.85, I know what I said about beating, but if they beat that much, wow, good on you. But I actually, the one thing that stood out to me was how low their guidance was.
Yes.
Like that, 80 cents. Like last quarter was $1.04 was the estimate. And like you said, they came in at 313. Let's point to Overstock, because Overstock, similar business model, similar beat last time. They actually had a better beat percentage wise as Wayfair, but they did, again, they were conservative. So Overstock estimated at a loss of 23 cents a share. They came in at 50 cents. And we actually called this. This was on the watch list.
Yeah.
We called this. We thought that was egregiously low. I think the same thing. So I actually understand why you went where you went. I just didn't have the cojones to do the same thing. So I'm at $1.20, which is a 50% beat, which is reasonable. for all the things you said. But honestly, I was so surprised that the estimates were lower than last estimate.
Yeah, it's crazy.
So they were just trying to put a low bar there.
Yeah, I mean, I think that, sometimes we talk about how analysts are smoking crack, whatever. But I think Wayfair knocks it out of the park again. And I got no reason to believe why they wouldn't. I really don't. So
385
is what I have them coming in at. Another record quarter for Wayfair. I think we see something close. I told you this was a week for bold predictions. That was probably my boldest.
This is probably this is the week that we've most been sort of differing in our opinions.
Yeah. For sure.
Well, there it is, baby. Top 5 stocks.
The top 5 stocks that we're watching this week. Again, just to reiterate, we want to make sure that you guys are making sure that you're sitting on your hands and that you're kind of being patient with these setups. If we go back and look at the watch list, or we go back and look at the chart rather on Wayfair, it's come down to a reasonable level, but maybe make sure this actually sees some sort of level of support before getting into it, as well as all of these other stocks, guys. So there you have it, the top 5 stocks that we're watching. You want to come back and see the top 5 stocks that we're watching for next week, you got to tune in to Stock Watch Sunday, 7:30 p.m. Eastern Time every Sunday. We will hope to see you there.